How's it going, everyone? It's Sam. We just had Jan Vinek, Kevin O'Leary, and Kathy Wood talk about the market in a conference. Now, I live stream this. I'll put the link at the end screen if you want to watch the full video. But they talked about the 2021 outlook. They talked about crypto. They talked about what industries will be here to stay, what's going to do really poorly over the coming years. And I want to cover it for you. So I have my nifty notes right here. I took notes on what they said about different topics. We'll get through it, but if you guys don't mind just hitting the like button first, I really appreciate that. We're not going to cut out much here because I just want to go through it for you guys right from what I took in notes. So if you guys like that, please leave a like. It helps out the channel a lot. Also, there is a link down there to Webull in case you want 2 free stocks worth up to $1,850. Definitely check that out if you're interested. So right off the bat, they talked about the 2021 outlook. What do they think about the markets going forward? Kevin O'Leary started, and I'm really focusing on what Kevin and Kathy said here for the most part. But Kevin said that he moved from a 50-50 portfolio, 50% equity, 50% fixed income, to a 70-30 portfolio, 70% equity, 30% fixed income. He says that he thinks stocks will do quite well over the coming years, and recovery stocks have been forever changed. He talked about how Zoom is changing his business practice right now. And he hit on this several times. He was kind of hard on airlines here, but maybe for good reason. He said that right now he is not going to take flights like he used to. He's not going to go to Dubai as often as he did before. Zoom is changing that for him. And he was very clear about that several times. And now Kathy said she thinks the market knew that interest rates weren't going to be this low forever. She thinks that that's kind of priced in at this point. Now, I don't know about that because we have seen a lot of inflation fears, a lot of fear about interest rates going up. But she says that they think that the markets have priced this in. She wants to know, though, how high will they actually go up once they do go up? Now, they don't think inflation will stay that high. She thinks it's cyclical. She thinks that we'll see some inflation and then we'll see actually some deflation in certain sectors. Now, she talked about good deflation and bad deflation. So she lays out two different things here. One is the good deflation, which is innovation. The cost of tech will go down for certain industries. She talks about gene editing. She talked about a couple other industries where these companies are moving so quickly and are innovating so quickly that's becoming less expensive. Now, the bad deflation comes from companies that have bought back shares and paid dividends over the last 10 years when they should have been innovating. They should have been putting this money back into their business. Instead, they were thinking short term, and now they'll have to cut prices on non-innovative products. Now, a lot of this, I will say too, I'm paraphrasing. But then they bring up, she then said that she thinks tech will be valued very well in the future and that certain cyclical stocks are doing quite well right now, but this is actually good for them long term. It's similar to 2016 where they saw a lot of money flow out of tech into cyclicals, into some of these recovery plays, and then it moved back into tech later and it actually helped them in the long run. Then they talk about crypto. Now, Jan Vinek says that one of the big reasons he thinks that crypto is doing well right now is because certain companies are willing to pay interest rates on crypto. This is bringing a lot of capital into this space. Kathy gave a little bit of a subtle flex here and said she got into Bitcoin in 2015 with some of their ETFs, and it scaled from about $6 billion worth of market cap to now about $1 trillion. So just a regular 150x, if I'm doing my math right there. Now, I will say this is the last thing I want to talk about here too on this front, but if you guys want, there is a link down there to BlockFi. You can get up to $250 worth of bonus and get up to 9% on some of your cryptocurrencies and stablecoins. That's where I hold my crypto, so definitely check that out if you're interested. But she said that they've done different analysis on institutions and how they should actually move some of their cash to Bitcoin. She said that they found that there's a very low correlation between Bitcoin and other asset classes, with real estate being the closest correlation, and that's still a very small correlation. Now, they did not expect such an adoption from companies this quickly, whether it is these companies that are highly investing in Bitcoin on their balance sheets, like Tesla, like MicroStrategy. These companies they didn't think would invest this quickly. And they didn't expect companies to start taking payments in form of Bitcoin this early either. she said, in quotes, $1 trillion is just the beginning of their market cap. So that's something that I think is really interesting to hear too. Now, O'Leary talked about something that I hadn't really heard about before, which is that he was worried about compliance with these coins. He's worried about where these coins are being mined because he's talked with a lot of Bitcoin miners. He thinks that in the future, coins that are blood coins from, whether it is that they are not eco-friendly, whether it is that they're from China, he doesn't think they're going to do as well as the coins that are here. He talked about being able to tell the difference between those two. Now, as I understand right now, we can't tell where they're mined, but we can tell when they were mined. Now, that being said, he's going to buy mines and hold them, taking a royalty going into the future. He thinks about kind of like real estate. Kathy then talked about, though, how energy consumption for Bitcoin is quite low compared to something like gold. She talked about how Bitcoin's supposed to be this digital gold, but gold is actually using a lot more energy, and how Bitcoin mining is a lot less energy sucking than something like financial services, like other retail banks that you see just sucking out a bunch of energy. And she says that, the energy consumption for Bitcoin is much lower. But then O'Leary said that might be the case, but there's still a spotlight on it. From there, they were getting a lot of questions on psychedelics. And Kevin said that, he's actually a big investor in the space. He doesn't really like pharma stocks. He thinks that they're very binary. They're either a 0 or a 1. They either do well or they don't. And that it takes a very long time for them. Now, they can take 6-7 years, he talked about, before we really know if the drug is actually going to do anything. He talked about how MindMed is his major investment in this space. He brought up the fact that their CEO talked to him and talked about how there were really no new medicines for mental health in the last 35 years. And that's why he's a big investor, because he thinks microdosing will do quite well moving forward. Kathy said, we don't really invest in binary stocks, but we invest in gene editing, and that they expect golden age in healthcare of about a 30% compounded annual growth rate in some of these higher tech companies. They then talked about the volatility of the stock market and the impact of social media and how that affects the volatility. Van Eck said that investment ideas are no longer a monopoly of Wall Street, that there are these companies that are coming in that think that they can just run the system, but now retail investors have access to a lot of information. He's also one of the people that helped bring Buzz, the ETF that tracks different social media to make investment decisions. He brought that to the public. So Kathy Wood talked about the wealth transfer of baby boomers, that people are looking for ways to invest, and they've really democratized what they've done, where they talk about their investments every single day. They talk about what they're buying. They give updates on stocks that are up or down and their outlooks into the future. And she thinks that indexes have done well in the past, but innovation is the future. And she does note that Robinhood speculators will learn quickly from their losses. She thinks that, if you are being too risky, that you will learn eventually that you have to have a balance. Now, O'Leary said that he actually joined Wall Street Bets and Robinhood. He talked to the CEO of Robinhood, and he says that he was actually kind of defending Robinhood here and Wall Street Bets, saying that Robinhood can't short stocks. They also can't use excessive margin. So I believe they're right around 100% margin that you can get. But he said that they're actually trying to protect some of these retail investors. Now, he actually said Reddit Wall Street Bets is squeezing out shorts like a teenage pimple, which I thought was interesting. They put it like that, but maybe true. The last thing that they talked about was what will be here to stay after the pandemic is done. What markets will do quite well? What companies or what industries, what sectors are going to do poorly? Kevin O'Leary said, companies that are selling directly to consumers, he stated Nike, for example, will do quite well. They're not in their old retail models. They're getting data off their customers. The losers will be the sectors that have won over the last 30 years. For example, airlines. He also stated REITs that are really heavily in retail will do poorly, he thinks. Now, Kathy said, over the next 5 to 10 years, we will see more innovation than we have seen in a very long time. She was talking about 50, 60, 100 years. We haven't seen innovation like this in a very long time. She really tried to state how difficult it was for her to try to get across how strongly she feels about this, how strongly this wave of technology will come together, because she thinks that everything, all the different tech sectors that they have will be moving in unison, moving together, intersecting and converging, and this will cause almost like a storm. She tried to equate it to a storm where one wave is strong, but when you're in a storm, one wave can amplify another wave, which can amplify another wave, and the waves just keep on getting bigger and bigger. And she thinks that this will be a very strong 5 to 10 years in innovation. She said she thinks really 50% of the S&P 500 will be negatively affected because they have not innovated. She thinks that companies that have spent too much money on dividends, buybacks, will be really negatively affected. Let me know what you guys think about this, though. That's kind of where they left it off. Let me know what companies you think will do really well over the coming years, what industries you think will do poorly. Let me know what you think about this in general. Do you guys like me covering this? Do you like the live stream? I'll put the live stream up here on the end screen. Thank you guys for watching, though. If you guys want to check out BlockFi to get an interest rate on your cryptocurrency, you can definitely check that out down below. If you guys want to see the Patreon and see what I'm buying and selling and get in a community with about 4,000 other investors, you can check out that link down below. Thank you guys for watching. I appreciate it, and I will see you guys in the next video. Bye.